Hey everyone, thanks so much for joining today. I'm Leah, I'm the founder of GemHaus, and today I have with us Max Holden. We're going to go over a lot of fun things today. We're going to go over these topics: how experienced investors decide whether a property is worth buying or not. We're going to go over evaluating cash flow and comparing short-term versus long-term rental strategies. And we'll go over financing options, especially with DSCR loans, and what lenders actually look at, all of the numbers that they look at. Before I started GemHaus, I spent over a decade in real estate. I managed over 75 million in real estate assets. They were mostly short-term rentals, long-term rentals, and expanded to a full-service brokerage. So we closed over 200 million in sales as well. Today I have Max Holden, who is a specialist in investment properties and DSCR. He is with Goodwin Mortgage, and he owns about 9 rental properties himself. He's going to walk us through his process and how he uses GemHaus when evaluating deals, especially for DSCR loans. So I'm going to turn it over to Max and let him introduce himself and walk us through his process.
Thank you, Leah. Hi, everyone. My name is Max Holden. As Leah said, I am with Goodwin Mortgage. I am a licensed loan officer in Arizona, and I have 8 short-term rentals myself, generating about $850K in revenue a year. And, today we're gathering to talk about everything DSCR loans. So I'm going to share my screen. Okay. So, DSCR loans, it stands for debt service coverage ratio, and it's a loan that doesn't ask about your income at all or how much money you make. It solely is based upon the projected cash flow of the property you're looking to qualify for with a loan. So when we look at DSCR loans, what is the main difference between that and a normal loan? So a normal loan is going to look at not only your current job, your previous jobs, your W-2s, and the previous 2 years of tax returns. If you're a self-employed borrower, your write-offs that you've done will actually minimize the amount of income that you can count towards your debt to income ratio, DTI ratio, that can qualify you for, let's say, a conventional loan. And because of that, it could push you out of bounds for qualification. So, the DSCR loan is a great opportunity for investors when they want to go and purchase another property. Let's say you're scaling and you have 10 properties. It's really great because you can go ahead and qualify solely based off of that projected rental income. With DSCR loans, we're looking mainly at, how much money the property will bring in compared to your monthly payment. Your monthly payment consists of, PIDIA, which stands for your principal, interest, taxes, insurance, and any HOA dues as well. GemHaus, it's a great tool where you can actually take a specific property that you're looking at and you can go and analyze the deal. We want to be able to look at all of the numbers associated with the property, how it's going to cash flow, and from there make the smartest investment based off of data-driven decisions rather than our emotions. So what I did was I took 2 properties currently listed on the market, and we can go through them and kind of go step by step as to how I will evaluate if it's a good deal or not, both on the long term and the short term side. So this property is 9801 North 49th Lane in Glendale. It is a 5-bedroom, 3-bathroom home, and GemHaus gives us all of these different variables, such as how much the property is worth, the down payment, the interest rate, and then they also will pull in their projections for long-term rent, your ADR, which is average daily rate, your occupancy, and then short-term rental data as well. So from an initial look, you can see that GemHaus is saying that, the better decision here would probably be going the short-term route. You would net cash flow $1,400 a month compared to just basically breaking even. So if we go into this calculator section right here, I can actually see all of the back-end data that's being used to pull in these calculations. So GemHaus is saying that this property is valued at $508,000. On long term, it's going to bring in just over $3,100 a month, while you can really see the jump on the short term side, which would bring in $6,300 a month. And then we have our taxes and insurance that the system pulls in as well. So when we're looking at DSCR loans, mainly you're going to be putting about 20% down. That's the minimum that we set forth. And obviously, if you were to put, an additional 5 or 10% down, you get even better pricing. So if I'm talking about where rates are sitting currently, I can go ahead and update this metric right here. So it's pulling in a 6.66. I'm going to go ahead and put in a 7%, kind of a baseline of where the market's currently at. And now you see that our numbers shift as well, right? So if our interest rate goes up, we're paying more every month on our monthly payment. And because of that, that will affect our returns. So with 20% down on about 507,000, we have a rate of 7% with a loan term of 30 years. And I'm going to actually update closing costs to 3%. Closing costs are typically between 2 to 4%. So I'm just going to go ahead and put in the middle. This is a really great tool that GemHaus has right here with short-term rental income allowance. When we're talking about the rental income that can be accounted for within a certain loan, right? A lot of investors on the short-term side are going to cut the rents by 20%. So instead of accounting for 100% of this $6,300 right here, many investors are going to say, you know what, short-term rentals are a little bit more risky. We're going to only account for 80% of that. So I'm going to go ahead and just change that to 80%. And as a side note, as I do that, you can actually see the DSCR value change. So the DSCR is calculated based off of how much projected rent the property can bring in every month compared to your monthly payment. So if I come and I switch it back to 100%, we're at over a 2.0 DSCR. But if I change it back to 80, it drops. And that drops because we're only accounting for 80% of that total rental income that GemHaus is saying we can bring in with this property. And this is great because when investors are going and actually underwriting the deal, they're going to be taking that 80%. So we can actually see in live time what our true DSCR would be. And if I wanted to just back into it myself and see how we get to that 1.7, let me just bring my calculator over. What I'm going to do is I'll take that monthly income that GemHaus has as $6,355. And I'll want to take 80% of that, $5,084. And then we're going to divide that by the monthly payment. And where do we find the monthly payment in the system? We can actually come to this show impact section, and it will show us, based off of all these different variables that we're adjusting, how it changes the key assumptions. So that first one is going to be the monthly payment. So the monthly payment is just under $3,000. Let's go ahead and take that rental amount, and we will divide it by the monthly payment. which gives us 1.69, and it lines up with GemHaus. What just happened? Okay. And yeah, it lines up with GemHaus right there. So as I continue to come down on the investment calculator, right, I'm changing the key assumptions based off of my scenario. STR income will count 80%. You know, this property doesn't have an HOA. And then we can input any management fees. So you can do the long term and the short term. And these are baseline for the market at around 8 to 10% on the long term side and 20% on the short term side. Now, if we go ahead and we adjust these, let's say I am looking to self manage and I'm not going to be paying a management fee, I can go ahead and fully just take these out. And you can see how that actually changes our cash flow, right? So now we're not paying those management fees. We'll be collecting more money every month, putting in our pockets. And then we can adjust our utilities as well. I typically like to just take these out to look at it from a baseline, but it's great that the system allows us to put this in if we like. But as we take those out too, you'll see that on the short-term side, the cash flow has been increasing as well. So now we're at $3,200 a month. If I wanted to look at an option at 15% down, I can change that too and just see real quick what my numbers would look like. So let's say I wanted to put actually 25% down, right? So on 508,000,
You can just change it in the assumptions bar too at the top.
thanks, Leah. Let's go ahead and do that. So as we put more money down, our loan to value, right, our LTV will change as well. So if we're putting an additional 5% down, then our loan to value is going to decrease as well. With that, our rate would decrease too, typically, because as you're putting more down, it's more palatable to the investor, and they're going to give you a lower rate for it. So in the market right now, it's probably around 6.875, and that will change our cash flow per month as well. You can really see in this example that the short-term side is the much stronger side. You're bringing in an additional basically $3,000 a month on the short-term side. You could see the gross revenue that you're projected to bring in per year on both long and short-term rental. And, your cap rate, your cash on cash, which is much stronger on the STR. If we keep coming down, I can then see comparable properties that have sold in the area. And I can filter that based off best match, what's the closest to the property, most recent, on and on. If I want to look at the short-term rental side, what I can do is I can come into the explore these comparables in Comp Lab, and it's going to bring me into the Comp Lab where I can really hone in on, the comparables and where I can see this property really going in terms of projected revenue. So there's a lot of different filters that I can add here. We're going to do entire home, right? We're not doing a private room or shared room. It's the actual house. This house that we were looking at, it's a 5-bedroom, 3-bathroom home. So bedrooms, I'm going to do 4 to 6 bedrooms. Typically with a 5-bedroom home on the STR side, that can fit anywhere from about 10 to 16 guests. So I want to just fit in as much as I can here. So 4 to 6 bedrooms, bathrooms. We'll do 3 bathrooms, or we'll do 2 to 3 bathrooms, just to include more. And guest capacity, we'll do 10 to 16 guests. Now with my search radius, I'd like to go down to about 2 miles and see what's in the area. There's really not a lot in the area right now of what I'm seeing. And this property has a pool too. It's very important to understand your market, especially when you're going and investing there. In Arizona, if the house has a pool, you're not going to be competing with homes that don't have a pool as well. So I want to just set that minimum baseline right there that it has to have one. And again, we can see that there's only one house in the area. Now there's two in the 2 mile radius that we would be competing with. So I want to go and actually take a look at these homes, see what their Airbnb listings look like, what certain amenities they have that they offer, and if they're true comparables to my home that I'm looking to buy. So let's go into these. So first thing I see, the guest count is 14 guests. All right. If the house that I'm looking to get will fit 16, then a 14 guest count home will be competing with me. There are 5 bedrooms and 3 bathrooms, just like mine. So we can go in and just take a look at these pictures. It looks like a really nicely furnished house, nice kitchen, good finishings, professional photos taken. They have everything put out and designed well. Board games. Let's take a look at the backyard quickly. So it's a nice pool. They have a fire pit. It seems like that's basically it though, as of what this house offers. They have a small game room right here. Nothing that really stands out. No wallpaper in the game room. Let's take a look at the second house. All right, you can see already that this house is designed much better in terms of an eye-popping way. So this house fits 16 plus, 5 bedrooms, 2 bathrooms. I would say that if someone's looking to stay at my potential property that's a 5.3 and can fit 16 guests, they're probably going to be looking at this house as well. So we can take a look at the pictures. There's a mural in the back, hot tub, nice pool table, like murals done. Looks like it's Monopoly themed. So I would say that this would be a comparable for what I would be looking for in a short-term rental. Fire pit, they have board games. Let's check out the bedrooms quickly. Nice kitchen. Yeah, and there's wallpaper in some of the bedrooms too, which is cool. So I would count this one as well. And then I can just see, what they're bringing in revenue per month. So the one we just looked at is just over 6,600, and the one we looked at beforehand was 5,000. I would say that we can even increase the radius a little bit just to look at 2 more of them. Right, this 5.3 is bringing in just over 9,000. We can kind of check out why that is. It only fits 10 guests, but it is a 5.3. It doesn't look like it's designed like anything crazy either, right? Nice kitchen, but there's no murals that I'm seeing. So far, there's no game room at all. Let's check the backyard quickly. It's a nice pool, but there's nothing that's super eye-catching out here, right? There's no games, there's no fire pit. So it really just shows me within this vicinity, there's not that many homes that, are 5 bedrooms or more that can fit up to 16 that, have a full game room, a lot of murals in the house, a fire pit, nice backyard with popping photos for the listing itself. So, that's something that I would want to penetrate myself if I'm an investor looking to invest in, the Glendale, Peoria area within this vicinity. Now we can go to this second property, kind of do the same thing. This one's in Mesa. It's a 5-bedroom, 4-bathroom home. This one is for an additional 100K. So this one's at, or 170K. The previous one was at around 508K. This one's at 674. So again, what I would do is I would look at what the down payment is. We're on the DSCR route, 20% down. So we're going to just adjust this to a 7%. And you can already see that the obvious way to go here would be the short-term rental side. You would be in the negatives on the long-term rents. And if we look at the DSCRs, right, that's showing on the long-term rent side at a 0.81. So basically with the ratio for the DSCR, if you're at a 1.0, you're breaking even. Your monthly payment is equal to how much you're bringing in rent for the property. If you're above 1, that means that you are net positive, bringing in more in rent than your payment. And if you're sub 1, meaning under a 1.0, you are losing money and your rent is above how much you're actually bringing in. So if we go into the calculator again, here's all the key assumptions. Taxes, insurance are in there, our interest rate adjusted. We will change closing costs to 3%. And I want to use 80% of short-term rental income allowance, right? So our DSCR came down, but a 2.0 is still extremely, extremely strong. If we're looking at the section with the management fees, having the vacancy rate in here is important too, just so that it accounts for if the house is empty at all, right? So SCR management fee, let's just take these out too. You're still sub 1 on the long-term rent side, but let's say we did want to go ahead and bring in a management team for this investment. Even if we're paying the management team 20% here, we're still net positive almost $3,000 a month. Our cap rate is almost 12%, which is great. And our cash on cash at 22%. And you can actually see where that calculation is coming from if you just hover over the value for both of them. Again, I'll take out the utilities for right now, just to see from a baseline perspective what the investment would look like. And that's great, right? We can come down here and see the monthly income that the property is expected to bring in, which is $10,000 on the short-term side, $3,284 on the long-term side. And again, one of the most important things is to come and look at the comparables. We can just see what other homes in the area have sold for. So this one is listed for $675, and we can really just take a look and see, all right, is it a good deal, right? We can look at all of these other homes that have been sold if we deem them as comparables, and from there, if it backs up the price that it's listed for right now. Let me just come up real quick. This is a 5-bedroom, 4-bathroom. So that was a 5.3. Let's take this one too. Right, this one was sold for $650. It's a 5-bedroom, 4-bathroom. 2,700 square feet. It does have the pool. And it looks like it has good finishings as well. The flooring is great. It looks pretty modern. The kitchen is nice. The cabinets don't look like they are worn down at all. The second one last bathroom at just over 2,700 square feet. Again, the backyard looks very nice. Backyard is one of the biggest things when we're looking for, a short-term rental investment in Arizona. That's going to be your biggest eye-catching photos when you go and you list the property. This one too, it has nice countertops. The flooring looked very nice. Cabinets don't look worn down. But then again, we can look at the long-term rents and what they're going to bring in. So from this example, we were able to see in the operating breakdown that GemHaus is expecting us to bring in just over $3,200 in long-term rents compared to the short term, which is just about 10,000. And I can already see from a quick glance that everything's around that range. So it really makes more sense to go the short-term rental side here, right? Everything's about 7,000 or more a month. And I can come back into the comp lab right here. And again, it's a 5-bedroom home, so I'm gonna look between 4 to 6 bedrooms. Bathrooms, that was a 4-bathroom home. We'll do 3 to 4 bathrooms. Oh, wait, let's change this to STR. So 4 to 6, bathrooms, 3 to 4. Guest capacity, we're gonna do 10 to 16. And we'll do within 2 miles. We'll put in the pool as well. And you can see that there are a lot more than the last example that we did. So we can really go into these and take a look. Another cool thing in GemHaus, I'll show you guys after. But yeah, from these top 5 photos, they do have a really nice pool, the hot tub. But again, nothing like crazy eye-catching to me. They do have the pool table. There you go. They have a movie theater. Basically, we're just looking for common themes from all of these listings of what the listings in the area can provide us with and what we need to hone in on when we're going and making our own investment too, right? If all the homes in the area have pools and they have game rooms, in the backyard fire pits, murals, then we need to make sure, maybe mini putts, then we need to make sure that we are at least accounting for some of those things in our investment so that we can really compete with these homes and we're not on the back foot when we go and we list the properties. If we come back in GemHaus though, you can put a minimum review count, which is amazing. Typically with professional hosts, you're going to have at least 20 reviews on the listing. That means that it's a really established property on Airbnb, and you can really go based off of that. So that took out about 2 of the houses within here, but there's still a lot of established homes in the area. And again, it's just the same process. These top 5 photos look much better. You can see the mini putt. They have loungers. The pool's nice, pool table, big fire pit area, hot tub, and they have 123 reviews at just under 5 stars, which is amazing. So these are all things that I look at when I'm going ahead and I'm thinking, all right, is this a good investment for me? Is this a good investment for my clients? And just walking through the analysis with them from GemHaus, making sure that the DSCR is strong. If it's not strong, why that is, and just making the best judgment in terms of should we go the long-term side or the short-term side, where we can really see ourselves in terms of revenue per year, right? On the short term, this is 120 compared to the 40. It's like a no-brainer. They'll give you the occupancy as well, so you can get a good viewpoint of where you see yourself in terms of occupancy, and just looking at the different amenities, what the houses in the area are offering to potential guests, and from there making the necessary conclusions to be able to say, all right, I need to have a pool table, I need to have a game room, I need to have all these murals, a certain guest count that I need to hit, what I need to put in my backyard to make sure that it is eye-catching photos when I go and get professional photos done, so that I can really compete with these other properties in the area. So I think what would be beneficial now, if any of you guys have any questions, if you'd like to go over a specific property that you brought, we can do that too. Leah, I think it would be nice to open up the floor.
Yeah, that's a great idea. I have maybe a question as well.
Sure.
So I guess for a new investor that's looking at an investment property or trying to use a DSCR loan, what advice would you give them to take away with?
Yeah, so a DSCR loan, again, it's looking at how much income how much projected income that property will bring forth. It's mainly for those people that can't show as much income on like, let's say, a conventional loan. There's a lot of different factors that go into it. With DSCR, you need to put at least 20% down. As we put more down, it's going to be more palatable and you'll get a lower rate. But just being able to understand what your ratio is at and all of the different factors that go into it, just so that you can really understand the investment you're making and have that data driven assumptions made rather than just going off of the emotion of saying, all right, this might be a great house for me, but if it's not a great investment for you, it might not be the right house, even though it looks very nice. I would say that's the biggest thing. Also, when you go ahead and you want to make an investment in a specific market, we really need to look at the different properties in the market and those comps, run that analysis, see what the other comps are offering, whether on the long term or the short term side, and where we can really see that property fitting into the market, and from there we can make those assumptions to how much money we can see the property making, and if it is that right investment for you.
Awesome. So someone also asked, can anyone use GemHaus or just lenders? Yes, everyone can use GemHaus. That's why we built it. So you can have individual account. You can sign up at gemhaus.com. Lenders obviously use it for their entire workflow as well. And there was another question that came in that says, what is the difference between DSCR and conventional loans?
Yeah, so the difference between a conventional loan and a DSCR loan, again, a conventional loan is going to be looking more at your income. So it's going to be looking at your current job, how much income that brings in, maybe your previous job as well, if it was within the last 2 years. It'll look into your W-2s and your most recent 2 years of tax returns. So the income that you're currently bringing in is a huge factor in that conventional financing. And the reason why a lot of people will end up going the DSCR route is, let's say they're scaling up and they have 6 properties now, and they've done a few on the conventional side. Now they're at the point where they have all those properties that are also being accounted with, those monthly payments, which can affect their debt to income ratio as well and push them out of bounds to be able to qualify for that conventional loan. So the great thing about the DSCR loan is that we're only looking at that specific house that you're going and trying to purchase. We're not looking at any of your previous income history to qualify you. It's solely just based off of those projected rents for that property. And it's very beneficial to self-employed borrowers that are taking all of these write-offs because maybe half of their income isn't being able to qualify because of all these write-offs. Instead, they can just shift over to the DSCR route and they don't need any of that income being accounted for, and they can qualify much easier.
Okay, cool. Someone actually just asked if we could look at this property. Could you run, I don't know if you can open the chat, but it's 320 South 14th Street, Chesterton.
Illinois?
Yes, Indiana.
Oh, Indiana.
Yeah.
Okay, so this is a 3-bed, 1-bath, 1,000 square feet. The lot 6,200. Initially, just with GemHaus's projections, they're saying to go the short-term rental route, right? Um, let's adjust this to 7% of an interest rate, just about where things are at right now for 20% down on a DSCR loan. And what
That's
we're
a
going to
high
do,
cap rate, very high cap rate, 16%. The
mhm,
property is only, it's valued at 217,000.
yeah,
So yeah, that's a pretty healthy cap rate. I mean, on both sides, even with a long-term rent at,
at
it's almost at
almost
6%. So
6%. Yeah, that is good. Let's go into the calculator and adjust. Let's put closing costs to 3%. Okay, we'll put 80% for STR, right? And you can already see here the long-term rent management fee. In our previous examples, it was 8% and 10%, but GemHaus will actually pull it in for the specific market and what it's supposed to be at. So that's why it's 8.5. STR is still at 20, but again, let's just say you wanted to self-manage, right? On the long-term side, that brought you basically just to a 1.0 DSCR, aka a break even. And we can take out utilities as well. Extremely healthy DSCR on the short-term rental side right there, and that's accounting for the 80%. Let's go ahead and take a look at these comps, right? So everything sold for about 200, 220, 250. Let's go into the comp lab. And this was a 3 bedroom, 1 bathroom, right, Leah?
uh, yes, you might need to actually go back to the report. Yeah, three bed, one bath.
Okay, so what I'm gonna do is I'm gonna do anywhere from um, I'll do 2 to 4 bedrooms, and let's just do 1 bathroom. We'll actually change this to 3 bedrooms. Gas capacity, we'll just put 6, so up to a max of, we'll do 7 just to include it in there. The reason why I only did 2 to 3 bedrooms, right? Because if we have a 3 bedroom home, let's say we can fit 6 or 7 people in there. Once we get to a 4 bedroom, you can fit 8 plus, like 8, 9, 10 people. So, if we're looking at that 3 bedroom, typically those potential guests are going to be looking just at 3 bedrooms, not really 4 or more. Same with bathrooms, same thing. So this property only has 1 bathroom. It's important to note that, yeah, with those bigger groups, if they are looking for more bathrooms, it wouldn't really be a comparable property to look at this one. So just in the area, the search radius is higher and there is only one short-term rental. So there's not a lot of supply in the area. Let's just go ahead and take a look at it. It is a 3 bed, 1 bath. So this would be a direct comparable. Let's take a look at the photos. It's a nice living room. It's a modern house. They have a nice little foyer area right here. The kitchen looks good. I like the dining table, right? It'll fit everyone, all 6 people. And then in terms of bedrooms, they have a king bed in one, single bed in the other, and there's a 1 bathroom. Let's see if they have anything else that's eye-catching. It's a nice little porch area, and that's it. But this would be a direct comparable, right? It's a 3 bed, 1 bath, and within a 6 mile radius, it's the only one in the area. So if people are looking to come to Chesterton, um, there isn't much offered in the market. So you can really go and penetrate that market if that's what you're looking for and if it's, the right investment for you. Um, And you can really go based off of this listing right here, see what they offer and how you can just set yourself apart. And again, on the DSCR for short-term rents, it's really strong. And on the long-term rents, it's right at break even with a cap rate of over 6%, which is very good.
Yeah, that's a pretty good investment property for sure, especially at that price. So, well, to wrap things up, a few things that stood out to me during this entire call is that clearly underwriting deals with accurate data and speed, and having all the comps and cash flow and DSCR projections in one place really helps when evaluating properties. It's exactly why we built GemHaus. So as a reminder to everyone that's on the call, instantly you can just run a property, compare the strategies, you can see the DSCR, review comps. So if you're an investor who wants to evaluate deals faster, or just getting into it and really want something that will take you through the entire underwriting process, we'd love to show you how it works. We can run a deal with you together. If you have a potential deal that you're looking to purchase and you need a loan on it, definitely reach out to Max. We're going to send out a recap of this recording after, so you'll have our contact information and you'll have the recording of this webinar. So Max, thank you so much for coming on. I really appreciate you sharing your experience and using GemHaus and going over DSCR numbers. And again, if anyone has any additional questions, feel free to reach out to us. We'd love to help in any way. Love to see people growing their portfolio and investing in more properties. So thank you again. And thanks, Max.
Yeah, thank you for having me. And if you guys have any questions, feel free to reach out to me. Yeah, I'd be more than happy to help run through the numbers and, see if it's the right investment for you.
All right. Well, thanks again, everyone, for joining, and we'll see you again next week.
Bye, guys.